Bitcoin is eyeing a breakout past $120,000, while SPX futures just opened above $6,400 for the first time ever. This surge came right after the 90-day delay on China tariffs and a fresh trade deal announcement between the US and Europe. ETH is hovering near $3,900, and several altcoins are showing signs of serious momentum. In this video, I'll break down why I believe this could turn out to be one of the most bullish weeks we've seen in a while. I'll also walk you through my specific outlook on ETH and why I expect a strong move across altcoins before we head into what might be a tricky September. If you're finding value in these updates, tapping that like button really helps push the research further. And if you're not already subscribed, now is the time. Lots of alpha coming your way. Let's get straight into it. Alright, let's first take a closer look at what Bitcoin and ETH are doing, then we'll move ahead from there. Bitcoin has officially broken out of its descending triangle, pushing through the downtrend resistance line that's been holding price down for weeks. That's a solid move, but we're not in the clear just yet. BTC is now pressing up against a major horizontal resistance around 119,515. This level has rejected price multiple times in the past, so for this breakout to truly stick, we need a strong 4-hour candle close above it. Until that happens, 119,500 remains a key barrier. If bulls fail to push through, we could see Bitcoin chopping sideways or even pulling back into the previous range. But if Bitcoin does manage a decisive close above 119,500 with solid volume, the next upside targets would be the psychological 120,000 zone, followed by the all-time high region around $123,000. On the flip side, if sellers take back control, support lies down at 118K and further below at 114K. In short, the real confirmation for bulls will come if Bitcoin manages to hold above $119,500 on the 4-hour timeframe. Until then, this range remains a critical fight zone and a possible turning point. ETH has just broken out above a multi-year downtrend that has been capping every major rally since 2021, and that's a serious win for the bulls. On the monthly chart, we're finally seeing price push through that long-standing resistance and step into the critical $3,900 to $4,000 zone. While the $4,000 level still needs to be taken out on a convincing closing basis to lock in full confirmation, the breakout above the old trend line already signals a major shift in momentum. RSI is starting to turn up as well, pointing to the possibility that this rally has real strength behind it. As long as ETH holds above that trend line and consolidates near the current levels, the structure continues to favor more upside in the weeks ahead. This move flips the tone from being range-bound and sluggish to one that has finally opened the door for ETH to make a run at new highs. For now, the outlook stays firmly bullish as long as the breakout remains intact. So why am I leaning this bullish right now? Let's start with what's unfolded since that brief Bitcoin dip below 115K on July 25th. ETH has been leading the charge, climbing more than 10% from that local low and showing strong relative strength. On the macro side, the wind is clearly shifting in favor of risk assets. The US and European Union just struck a major trade agreement on July 27th, settling on 15% tariffs instead of the previously threatened 30%. Even better, China and the US are widely expected to extend their tariff truce by another 90 days, which signals broad de-escalation across the trade war front. Add to that the rising tide of global liquidity, and you've got a powerful backdrop forming. Historically, when Bitcoin lags behind this kind of liquidity expansion, it tends to play catch-up with a strong impulse rally. That setup is now back on the table. The technical picture is lining up cleanly with the macro backdrop. ETH spot ETF inflows have now been positive for 16 days in a row, which shows steady demand building from serious players. At the same time, Bitcoin dominance has taken a sharp hit, dropping from 66% to 61%. This kind of sudden shift in dominance usually signals something big is brewing beneath the surface. With global liquidity continuing to expand, conditions remain highly favorable across the crypto space. A big part of the drop in dominance is ETH quietly eating into Bitcoin's market share, and I genuinely believe ETH is about to surprise a lot of people, leading the next wave of upside and carrying a large portion of the altcoin market on its back. One major reason is regulatory clarity finally starting to emerge. After years of noise and confusion, US regulators are beginning to show their cards. The Genius Act just gave the green light to stablecoins, and that's already having an effect. Total stablecoin market cap is climbing fast, and this is happening before the Genius Act is even fully in play. Since the majority of stablecoins are issued on ETH, this flow directly strengthens the ETH ecosystem. On top of that, the Clarity Act officially labels ETH as decentralized and mature. It clears a path for institutions to start allocating capital without hesitation. And that brings us to the next big catalyst: institutional inflows. We're seeing a major pickup in demand for ETH through ETFs, unlike anything we've seen before. Right now, momentum is clearly with ETH, and it's not just the charts telling that story. Companies like SharpLink Gaming and Bitmine Immersion are taking a page straight out of the Michael Saylor playbook, aggressively stacking ETH with long-term conviction. Just yesterday, SharpLink Gaming added another 77,210 ETH to their holdings, bringing their total to 438,000 ETH worth over $1.7 billion. Bitmine is holding over $2 billion in ETH as well. What's even more wild is that both of them now hold more ETH than the ETH Foundation itself, and unlike the Foundation, they aren't selling. ETF demand is heating up fast too. ETH ETFs saw inflows of $1.3 billion this week alone, showing that institutional appetite is only growing. On top of that, BlackRock is now trying to add staking to their ETH ETF, and approval is looking increasingly likely. If that happens, these ETFs would start offering yield to holders, which could be a massive boost. That kind of move would not only attract more institutions, but also make ETH exposure far more appealing as a yield-generating asset. It's the kind of structural shift that can drive serious capital flows into the ecosystem. Another major reason to stay bullish is the improving macro backdrop. We're now getting closer to a potential Fed rate cut on September 17th, and it's starting to look more likely. According to the Fed Watch tool, there's currently a 60% probability of a cut. If political pressure from Trump starts weighing on Powell, we could even see one more cut before the year ends. The dollar has also been sliding steadily throughout the year, dropping from above 110 to below 100, and is currently hovering around the 97 mark. As we've discussed many times on this channel, ETH tends to perform well when the economy shifts into a risk-on environment. We recently covered how ETH has been closely tracking the Russell 2000 index for years now. The Russell 2000, which represents smaller US stocks, usually rallies hard when markets go risk-on, and ETH often follows that move. With equities sitting near all-time highs and global liquidity continuing to expand, it's likely that the Russell 2000 will push higher, and if that happens, ETH is expected to move alongside it. There's another key macro indicator we've been watching closely here, and that's the copper-to-gold ratio. After a short-lived pullback, it has started to bounce again. This is a big deal for risk assets, especially altcoins, because each time this ratio climbs, it has historically marked the start of a risk-on period. We've seen this pattern play out multiple times before. For those of you tuning in for the first time, we're watching a specific 2-month window. If the copper-to-gold ratio stays above its 20-week EMA during that time, that becomes our confirmation. In traditional markets, it signals a shift toward risk-on. In crypto terms, it often lines up with the start of Altseason. Now for Altseason to truly kick off, what we need to see is the alts to ETH ratio move higher. This chart tracks the total altcoin market cap, excluding ETH and stablecoins, relative to ETH. When ETH pumps and outperforms the broader altcoin market, this ratio falls because alts lag behind. So far, the best move has been simply holding ETH, since it has outpaced the majority of altcoins during this rally. That's exactly why the ratio has been rising. But here is where things get interesting. Once ETH enters a consolidation phase and starts moving sideways, capital often begins rotating into altcoins. That's when this ratio starts to rise again, and historically that has been the trigger for Altseason. It's during that window that altcoins tend to explode, catching up to ETH's earlier move. I'm expecting ETH to break its all-time high in the coming days, and when that happens, a lot of altcoins are likely to go vertical. Momentum is building across the board, and this next leg up could be the one that triggers full-blown Altseason. We should see this rotation play out before the typical September pullback hits, so the window for upside might be short but explosive. We're stepping into a phase where momentum builds fast and rotations can happen overnight. ETH is leading, and that's exactly how previous Altseasons have started. Quietly, with ETH doing the heavy lifting while most altcoins lag, but this phase doesn't last long. Once ETH cools off, capital starts flowing into alts aggressively. That window tends to be short but extremely profitable if you're positioned right. At the same time, macro is setting the stage. Rate cuts, a sliding dollar, rising copper-to-gold ratio, and inflows into risk assets. These are conditions we haven't seen in years, and they don't last forever either. If things align the way they're setting up now, we could be looking at the cleanest alt rotation of the cycle. If you want to stay ahead with sharp crypto insights and early macro signals, make sure you're following us on X. And if this video helped, drop a like and subscribe. Thank you for watching, and I'll see you in the next one.